Hey everyone, welcome back to our channel. In this video, we're going to talk about why 2023 could be a great time to build wealth, despite the recession that many experts predict. We'll dive into why you shouldn't be afraid to invest during a downturn, why real estate can be a smart investment choice, and how to take on debt responsibly to make the most of the opportunities available. So, let's start by discussing why investing during a recession can actually be a smart move. When the economy experiences a downturn, the stock market and other investments may see a dip in value. However, history has shown that they tend to rebound and grow over the long term. In fact, some of the most successful investors have made their fortunes by buying low during market downturns and holding on for the long haul. If you're able to buy in at a lower price during a downturn, you'll stand to benefit when the market eventually bounces back. However, it's important to invest with a long-term view in mind, and not to panic if there are short-term dips or fluctuations. The key is to watch the actual value of the company and not the price at the moment. This is called value investing. It's a strategy that involves identifying companies that are undervalued by the market and investing in them with the expectation that their stock prices will eventually rise to reflect their true value. During a recession, many companies with great value can be found with lower prices than they should be, either due to short-term market fluctuations or because they are overlooked by the broader investment community. The recession may lead to a drop in the overall market, and stocks may be oversold, leading to some undervalued stocks. By doing careful research and analysis, investors can identify companies with strong fundamentals, such as a solid balance sheet, a proven track record of profitability, and a competitive advantage in their industry. By investing in these companies at a discount to their intrinsic value, investors can potentially reap significant returns when the market eventually recognizes their true worth. While there are always risks involved with investing in the stock market, value investing can be a smart long-term strategy for building wealth, particularly during times of economic uncertainty. Another thing that's beneficial during a market crash is investing in commodities. This can be a smart strategy during a recession, as history has shown that prices for commodities tend to rise during times of economic uncertainty. This is because commodities, such as gold, oil, and other raw materials, are tangible assets that have intrinsic value and are not subject to the same market forces as stocks or other financial assets. During a recession, investors often flock to commodities as a safe haven investment, leading to increased demand and higher prices. Additionally, government stimulus measures aimed at boosting the economy can lead to inflation, which can further drive up the prices of commodities. While investing in commodities carries its own set of risks, including volatility and geopolitical instability, it can be a valuable way to diversify a portfolio and potentially profit during a recession. Now, let's talk about the potential risks of taking on debt during a recession. While taking on debt can be risky during uncertain times, it can also present unique opportunities to buy assets at a low cost that produce cash flow. For example, real estate can be a great investment choice during a recession. During a recession, housing prices may drop, but the need for housing remains, making real estate an attractive investment. It can be a great time to take on a mortgage and invest in a rental property or other real estate opportunities. However, it's important to be smart about taking on debt and not overextend yourself. Make sure you have a solid plan for generating income from your real estate investments and are able to manage any associated costs, like property taxes and maintenance expenses. Real estate is a sector that offers unique opportunities for investors, including the ability to generate cash flow and build equity through the ownership of rental properties. Unlike other investment options, such as stocks or bonds, real estate allows investors to generate passive income through rental payments, and you don't need any money to invest, because you can take a loan from the bank. Additionally, when the value of the property appreciates over time, investors can build equity and potentially profit. By holding onto a rental property for the long term, investors can benefit from both cash flow and equity growth, making real estate an attractive investment option for those looking to build wealth over time. While there are always risks involved with investing in real estate, including property market downturns, tenant defaults, and maintenance costs, with proper research and management, real estate can be a valuable addition to a diversified investment portfolio. Additionally, real estate can provide a steady income stream through rental payments, which can help offset the cost of any debt incurred. Plus, with the possibility of inflation looming in the coming years, real estate can be a great way to hedge against inflation and protect your wealth. In conclusion, while a recession can be a challenging time, it can also present unique opportunities to build wealth. Don't be afraid to invest during a downturn, especially if you're able to buy assets at a lower cost. Consider investing in real estate as a way to generate income and protect your wealth in the face of potential inflation. But remember to be responsible when taking on debt and always have a solid plan in place for managing your investments. Thanks for watching, and we'll see you in the next video. Don't forget to like and subscribe.